Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, let's get into the analysis portion of this video. I want to cover some key trade setups as well. Let's first and foremost take a look at what the indices are doing on the day. Today being Tuesday, February 19th, 2013. Hope everyone had a very solid 3-day weekend. Now, looking at the indices, we are seeing upside. Again, you can see the markets breaking through the previous double top level of the 152.60 level on the SPY. S&P 500 tracking ETF is exactly what the SPY is. S&P today up about 9 points, Dow up 53, NASDAQ is trading up about 12 on the day. So again, you have upside. It's not dramatic upside, but again, it's a solid 0.5% basically across the board. Dow and NASDAQ up about 0.4%. But bottom line is it's still a little bit of upside. Markets continue to kind of inch towards the S&P and the Dow's all-time highs. They're basically 3 or a little less than 3% away at this point in time. On the SPY, the high back in 2007 was about 157 and change. So you're basically about $4 away from that right now, which matches up to about 3% or just a little bit less than 3. It's actually closer to 2.5%. Now the key is to recognize really what's going on out there in terms of market, analysis. Now if you go to the daily chart, I think this is important because this was the previous resistance point, the 152.5-ish area. We have cleared that, and if you zoom out on the charts now, you have a little bit more upside, which is a very likely scenario to the next pivot point, which comes in right around the 154.70 level. So there's a little bit more probable upside after this move up today. And again, assuming it holds. Now, if we were to see sell-off later in the day, then that all changes. But right now, anyways, based on a close above 153 on the spiders, to me at least, a close above 153 would mean upside to a 154.70. Now, if they do happen to pull the markets back below 153, then you're still within this pivot high right here, going back to late December or mid-December 2007. I know it's very hard to see on the charts, folks, but again, I'm zooming out all the way so you can see 2007 and see this little bit of a pivot high. There's a little tail there that extends up to about 153, and again, I'm kind of watching that to see where we close on the daily chart. Do we close above 153 or below on the SPY? And I think that should give us a good bias as of the next few days. Now, tomorrow we have Fed minutes, so I think that'll be interesting to watch as well. We really haven't seen any dramatic news over the long weekend in China or in Europe. China reopened after being off for a week for the new year. That's back underway. China was down pretty decently, actually, but Europe actually was up, so it kind of was a negation of both of those. If you look at a couple other keys out there, the market just seems to love it. I mean, we got some bad economic news today. The housing index not looking good, coming back in a little bit. We saw housing stocks dipping. We also saw continued worry over Walmart. Walmart said on Friday, or an executive's email said on Friday, that it was the worst sales month. February was the worst sales month in 7 years, which is pretty horrendous to make that statement when you're going back to 2007, 8, and 9 and how bad things were then. So, I mean, you're seeing a little pressure on Walmart, but the markets overall are just rejoicing. Even without Apple participating here. I mean, Apple, for instance, take a look at Apple today. Apple down again. It's off its lows, but still in this type of market move up, to see Apple down is a very, very poor little setup right there, and you have to kind of take note of that. What Apple's weakness tells us, and again, what you would call Apple here is relative weakness, because whenever the market's up and you have a major stock like Apple down, it's telling you that in relation to the market, this stock is weak. And if in a good up move today, Apple's weak, then it should tell us as well that if the markets are flat tomorrow or lower tomorrow or even up a little bit, Apple will likely be weak again. Overall, this tells me personally that as soon as the market does start to see a little bit of fear creep back in, you should see Apple pulling all the way back down to about the 440 level, which would be number one, double bottom here, which is not that far away, and then ultimately 420 and then 400. 420 is a no-brainer. 400 is a little bit more of a question mark. but most likely will be seen. I will be very interested. If I could be patient enough to not buy at 420 and we see 400 on Apple, I really do like that area, I have to say. I think at that point in time, you have to look at it like that's a major correction, an unbelievable drop. There's a chance it could go to about the 355 area as well, but I think that might be a little bit of a stretch. Okay, so that's what we have going on there. Dish reports earnings tomorrow. I'm holding this as a swing trade short. Most likely we'll take profits by the end of the day here. We're basically up $1 on this short, which again, considering the market, that's awesome. To be able to find that setup that still pays you even when the market is doing its thing and continuing to grind higher is always positive. And again, that's a Research Center swing trade alert. So again, we put out our swing trade alerts in the Research Center. We took another position today in the Research Center for those of you that are members. And again, just continuing to note here. But Dish, I think Dish is particularly interesting ahead of earnings tomorrow morning because notice how for the first time today it looks like it's going to close below the 50 MA. This actually looks bearish going into earnings tomorrow. Now, again, generally the consensus is to never hold into earnings because it's too high risk. But in general, I mean, this chart is exactly what you want to see going into earnings, how it's broken down here. And again, you could even take a trend line right here. And if you connect it through these lows, you actually have broken this trend line as well. So very, very bearish going into earnings on Dish. Again, being up $1, not wanting to take the risk, I'll probably just take my money and run. But nonetheless, just to kind of keep that in mind that it is a bearish chart now for sure. All right, what else do we want to take a look at here? Chevron's having a nice little bounce today, back up a little bit. Overall, Chevron just keeps going sideways here. Hasn't really taken out this high pivot, which was a perfect gap fill that we had talked about. I even talked about it in these free videos. I gave this level probably about 10 times before it actually hit. But that was a sweet little level right there. Perfect gap fill, pulled back. Now it's trying to creep up in this market environment. But the fact is, I mean, if you look at this leading stock as well, Chevron, markets are hitting new 52-week highs on the SPY, S&P 500, and this is not. So another little heads up there, if you will. You throw that with Apple. The only thing that is continuing to grind higher is JP Morgan Chase, which has a $50 resistance as its next target on the upside. So we'll watch for the $50 level and see if JP Morgan heads up to there. Goldman Sachs continues to kind of grind forward, up another $3 today. The master level on Goldman Sachs, many people keep asking, and I keep giving them the same answer here. This gap fill right here on Goldman Sachs, it's a beautiful, basically a Pierce of $160 level. I honestly I've been talking about this level probably about 2-3 weeks when we were down here. I didn't think it would go straight there. It's amazing, and again, just the patience to not short ahead of that has been a godsend as it's continued to grind up. If it gets there, which it could easily do it tomorrow, even if we have another decent little up day based on how strong this stock is, but I would consider shorting it there. I would really, honestly, I'd have no problem shorting it there. I really wouldn't. Based on that extended move into that major level, you have another pivot high right just above it that's going to act as resistance and protective lever as well. It doesn't look bad at all to me. So that's another possibility right there. BlackBerry up 13 cents on the day. Amazon's up 350. For the most part, it's a lot of green on my screen, but again, Apple is still negative. Baidu's getting hammered today. Nice little drop down, $2.20. By the way, pre-market on Traders Life, and Traders Life is our social network here where all of our expert PPT traders just constantly talk throughout the day, giving levels and ideas and so forth. I gave out the level of 91.75, probably around 8:30, maybe around 9 o'clock in the morning. So before the market's even opened, I said, guys, watch your master level here on Baidu for an intraday bounce at 91.75. The stock came down to 91.74, piercing my level by a penny, and then literally look at the bounce, a $2 bounce. So it just shows you how amazing that once you learn the PPT strategies, these proprietary strategies, it's amazing to see the accuracy and watching these things work out. I mean, literally to have a stock go to your level, pierce it by a penny, and then bounce $2. I mean, that's an amazing bounce. So again, that's as a day trade, that's all you're looking for. I mean, it's come down since then. I wouldn't trade that level again, but it was an awesome one. I mean, absolutely stunning, awesome level. All right, take a look at a couple other stocks here. Caterpillar. Interesting thing with Caterpillar, guys, this is basically triggering a head and shoulder pattern. I have to say, this is a very, very interesting. Look at this little head and shoulder pattern right here. And I'm just drawing it in for you guys. But look at that. As long as it closes below this white trend line, this triggers. And the target of this head and shoulder pattern is down just around here. All right, there's a key gap fill right in here. It's actually it's a little above that level, but right around this area, right around 90, 91, and then you have a gap fill there as well. So you're going to start to look for this to possibly collapse back down, come down to the 50, probably get a small bounce off the 50, and then actually go to target. So very interesting little chart set up there. And again, it's interesting because some of these larger stocks, these leading stocks, I mean, obviously Goldman is doing well, but some of these leading stocks are not performing well with the market, even with the market grinding up. I think a great case in point on this would be IBM. I mean, look at IBM today. All right, so the markets are up, right? But what's IBM doing? IBM is down 38 cents. IBM hasn't been able to catch a bid in basically 3 weeks since they reported earnings and had this huge gap up. Ever since those earnings, which caused a big gap up, the stock has gone down basically. And here the market is going up and up and up, and this stock can't even catch a bid. So these should be little heads up to you that, again, the party won't last forever. Maybe in the short term it'll last, but it shouldn't last forever. And again, just be aware of that. I think that's really the key. All right, guys, I'm going to get going here. I got to get back on the microphone for the end of the day intraday stock chat session where we can trade a little bit more. For those of you interested, come join the Research Center or the intraday stock chat. Intraday stock chat for day traders, Research Center for investors and swing traders. 7-day free trial for both. Come join us here at InTheMoneyStocks.com. Take care.